Hello everybody, it is time for our residential market update. And it's the last update of the year. I can't believe 2023 is here and gone. What a wild year it's been in real estate and trying to understand this dynamic market that really in my lifetime hasn't been the case. This is all new ground and territory, even whenever we compare it to the Great Recession in 2008 and 9. So just to give you an update, what's going on, not a whole lot's changed from last month. As far as what you're concerned about, and I know as a consumer, you're concerned about the prices. What are prices doing from this time to this time last year? And in general, they're slightly down, but basically flat year over year. And so I would say we're kind of at a plateau of pricing to down. Last year we saw prices drop. So we're from the time of the heyday that we had here because of COVID and all the stimulus and all the people moving here, when that all began and we started seeing 30% price appreciation. This time last year was the first month year over year that we had began to see a price decrease and not just a slow in price appreciation. So we're still seeing a little bit of a decrease from the peaks. But an interesting fun fact is the last 10 years, if you own a home in DFW and if you happen to be in there 10 years, you've seen your prices still, even with the little slowdown we've seen in the last year and a half, you've seen your prices increase 175% on average. That is just astounding what's happened in the DFW market. From a transactional standpoint, where we're still seeing less transactions from this time last year in general. What does that mean? It basically means that we're still in a standoff with sellers and buyers, where the buyer can't afford it because interest rates are higher, and the seller is still priced high, still looking for that 20 to 30% appreciation. One of the interesting things that is happening is price reductions are happening at a record pace as far as sellers reducing their home prices. Well, the problem is that they're listing it at a 20 to 30% price appreciation, thinking they're going to capture what was happening a year and a half ago. And so it's really not it looks like it's a declining market from overall pricing on what's on the market, but it's just really the market beginning to slowly make adjustments. Another interesting thing is, and I've said this before, is new homes, new builds. So typically their market share is 8 to 10% of transactions in real estate. The rest is resale. So that's you, the home buyer and seller, the home seller reselling their property. Well, they're as high as 30% market share right now. And there's two reasons for that. One is because number one is affordability. And so they're offering interest rate incentives, but they're offering interest rate incentives, but they're also reducing their prices. So if we look year over year and we look at new home construction, prices are down as much as 20% if we're just looking at straight new home construction. So they are making the adjustment, again, because they're a business and they just need to make an adjustment. It's different than a personal home, on top of the fact they're not moving somewhere like you are, the home seller, where you have to pay a higher interest rate. But let's talk about interest rates. The good news on interest rates is that we've peaked on interest rates. And the talk right now is, and we're on our way down. They've come down a full point almost, or right at a point. They blew through 8% 6 weeks ago, and now we're beginning to see even sub 7 interest rates, 7%. So that's relief. But what we're going to see next year is potentially some relief even further with the Fed reducing interest rates. But it's not going to be 3%, back down to 3%, 4% interest rate. I don't know that we'll see that for many years unless we have a catastrophe in the markets. That's the only way that would happen. And so we're gonna see a little relief where we might get to 6. If we see 5, that would be great. But the reality is we're gonna be bouncing probably between that 6 and 7 all year next year. But that's a relief from 8. So that's good news on the buy side, but it's still prices have to adjust for transactions to begin to pick up as normal. So, everything is predicting that we're going to see more activity in real estate transactions next year, getting close or begin to work towards normal activity. I still don't think we're going to have the just normal Dallas-Fort Worth activity because of inventory. So let me dig into what is going on a kind of county by county basis and look at prices. So if we look at average sales price for last month, this is November, year over year in Rockwall County was down 5%, up 5, basically 6%. Kaufman County down 5%. Dallas County up 7%, and Collin County down 4%. So, it's just all over the place. I would basically, like I said, DFW is looking at it basically flat year over year pricing. But that's off of prices that were down from the previous year. So the next one is average days on the market. So basically it's flat, same thing. It's up 12% in Rockwall, but flat in Kaufman, up 9 in Dallas, and down in Collin County. So just basically flat. So homes are sitting on the market around 45 days to 60 days. They're sitting longer, but not that much longer. And it's month supply, which tells us, are we still in a seller's market, buyer's market? Rockwall County is 3.6 months. That's right on the edge of a seller's market / balance market. 4 months would be balance. Kaufman's leaning towards a balanced market, 4.4 months. Dallas County is 2.8 and Collin County 2.4 months. Those are still strong sellers markets in those markets. And this is why you got to drill down to each county, is because it is different depending on new construction, depending on what the availability is in the area and how much it's sought after and pricing. So homes for sale, this is the big culprit, is we just do not have enough homes for sale. We have more people moving here than we ever have, and we're down from last year, which last year was anemic, and we're down from that year over year, the amount of homes for sale. Down 6.6 in Rockwall, Kaufman County, 4%, Dallas County up 4%, and Collin County down 11%. Inventory. That's all you're going to hear from me. That is going to be the main culprit until the resale market comes back and sellers start putting their homes on the market. Pending sales next. So we have this is an indicator into December. We are looking at sales being up 8% in Rockwall County, up 3.5% in Kaufman County, down 7% in Dallas County, up 4%. So we're moderately up year over year in the amount of sales that looks to be coming in December of this year, but that's off of being down nearly 30% last year this time. So, being flat, it just tells you that the transactional market is anemic, and that's why you see a lot of title companies and mortgage companies filing bankruptcy and closing their doors right now, and real estate companies. Let's look at closed sales for last month. They were down 4.5% in Rockwall County, and Kaufman County down 19%, Dallas County down 9%, Collin County up 8%. So mostly down in each county, except for Collin County, the amount of closed sales last month. And again, that's coming off of a year where it was already down 20% from the previous year. So just anemic sales continue in DFW as far as transactions. Prices are holding up. That's the good news for you, the seller. They are probably going to come down unless interest rates, some market catastrophe happens. That's what's going to have to happen in order for the market to get back to normal. I don't think it's going to be a huge correction. That's what nobody's calling for that. But we expect to see mid-year next year transactions begin to normalize in real estate here in DFW. And so if you have any questions, need any real estate services, we would love to serve you. We do residential real estate, property management, and commercial, and would love the opportunity to serve you. Have a great day.